It's not what we were expecting. The forecast was to add 83,000 or so jobs rather than lose 23,000.
It's surprise weakness in the job market. And if you think over the last year, you've got average job creation of about 34,000. The unemployment rate fell to 4.1%. And on its surface, that would be seen as good, a lower unemployment rate. It's because since January, people have been leaving the labor market. The labor force participation rate has been going down. So the jobless rate is down, but for a bad reason.
Hi, this is Michael Regan with Regan Team Home Loans, and welcome to this week's Real Estate Roundup for Wednesday, August 12th, 2026. Now to the BLS jobs report, and it came in at a whopping negative 23,000 jobs. So May and June were also revised negative 103,000. And the unemployment rate dropped to 4.1%, which would initially seem that that's a good thing. Unfortunately, it happened for the wrong reasons. It wasn't because a lot of people took jobs and so there's less unemployed people. It was because a lot of people lost jobs and even more got out of the labor pool. So the unemployment rate dropped, not because of all these jobs created. It actually went, a lot of people just disappeared off the rolls because they retired or they just age out. They've been on unemployment so long that they're actually taken off the rolls. And so the unemployment rate dropped, even though it wasn't because we had this huge job creation and a bunch of people taking jobs. Then into the consumer price index. So the headline was at 3.4% year over year, and the core is at 2.5%. The headline was up 1/10, core was up 2/10. So we really saw that inflation lately has been very tame because obviously with the Iran conflict, oil though has come down, which has been really good. When oil comes down, gas prices come down, and that bleeds through the entire economy. And all of a sudden, now you have lower inflation. So that's the good news, is that we are seeing lower inflation overall. And hopefully this continues even into next month and beyond, because that'll be good for mortgage rates and quite frankly, good for all of us having to pay less for everything. And then on to the existing home sales report. So it wasn't a stunner of a report. We were down 1.7% month over month, but we are up 0.7 year over year. Now, this is the thing to pay attention to with this, is that rates were elevated last month in July. And so you obviously, it's amazing that we're still up month over month with those elevated rates. It just shows there are a lot of people still buying homes. It's just not crazy. Now, when rates come down, it will get crazy. But the whole thing is we don't know when that's going to happen. So every single month you wait, it just gets more expensive. And then we see nationally, we're at 4.6 months supply, which is an exactly balanced market. So not a seller's market, not a buyer's market, a balanced market. And you're still seeing 19% of homes sell for above their list price. Now let's see what the market's doing today. So right now, the Fannie Mae 30 fix is up 13 basis points, and you'll see the chart. Red is bad for rates, green is good. So we've had a lot of red. Rates have obviously gotten worse, and we've just kind of really been shuffling around this 25-day moving average. We obviously have been getting some good news with bad jobs report, which is not good news for all the economy, but it is good news for mortgage rates. Typically, when the economy weakens, rates come down. So we've seen things that normally should be good for rates and rates getting better, but obviously what throws a wrench into this is the tariffs, all the kind of tariff back and forth, and also big is the Iran war and the price of oil. Whenever you have that, that has been elevating the mortgage rates, the cost of everything. But hopefully at some point, once all that gets kind of settled, or at least oil comes down even more, then that'll filter through the economy. And we should hopefully see mortgage rates get better at some point, but who knows? Every time we think that they're getting better, some wrench gets thrown into it. So essentially, for the last 3 years, we've had about the same interest rates this time of year, and the market just keeps chugging along. So there's no point to wait for rates to go down, because at this point, we don't know when that's going to happen. Really, you buy because you need to, and it makes sense long term, because home prices, even with elevated rates, just keep going up and up and up. And that's it for this week's market wrap. And don't forget, we specialize in reverse home loans for seniors and cash flow loans for those who are self-employed and investors. Have a great week.